Good afternoon. Welcome to Midcap Radar. I'm Sonal Putra. With me, as always, is Vivek Iyer. And across the indices, there's some green. But look at the outperformance by the midcaps today.
Well, absolutely no complaints to start the show today. It's green across the screen, and that's very, very good news. It's an action-packed show. A lot of managements that we'll be quizzing, and also a lot of stocks that we will be discussing. First up, let's start the show. The headlines. Market rises to the day's highest point in an otherwise volatile session. The breadth is quite positive, with advances well ahead of declines. Autos, utilities, and metals are the big gainers, even as defensives, FMCG and healthcare drag. Midcaps outperform.
Aarti Pharma rallies after the company sees good margin improvement in the fourth quarter. Revenue also rises 4.3% on a YOY basis.
Cochin Shipyard jumps over 8%, even as the company gets a large order in the range of 500 to 1,000 crores from a European client.
Zomato is under pressure despite a strong showing in quarter four. Brokerages remain bullish on the stock. The management says they plan to double the number of quick commerce stores in FY25.
Hindustan Aeronautics surges after brokerage UBS issues a buy call and raises the target price from 3,600 rupees a share to 5,200 rupees a share. UBS expects a 3 times rise in the company's order book over FY23 to FY27.
Okay, all right. Those are the top headlines for the markets. As we were pointing out, it's a green screen for the Indian markets. The Nifty is up 130 points right now. In last couple of minutes itself, it has seen some leg up as well. So 22,235 on the Nifty as we speak. That chart should come up for you on the screen. And if we look at something like a bank Nifty, that one is also up 103 points. What is really taking our breath away today is the midcap. So the midcap index is up 446 points right now. It's a 0.9% of a gain that we are seeing. And across the sectoral indices, it's some green that we are seeing, barring pharma, FMCG, and IT. So defensive's not doing so well. But apart from that, it's a good-looking screen.
Absolutely, and if you're looking especially across the metal pack today, some of the top gainers look at names like Nalco, look at names like JSPL. They're doing very, very well in the session today. The Nifty Metal Index up 3%. But this is a very good time to get to our special segment, Midcap Movers, where Hormaz has been looking at the screens and the midcaps that are moving around in the session. Hormaz, over to you.
Well, when you say that the midcaps are taking your breath away, it's business as usual for the markets, right? The broader markets are outperforming, and it's been a while since we said that. So we'll start off with the top gainers in the broader markets, and Vodafone Idea there leading the pack. Torrent Power, Mankind Pharma there. After that, CNBC-TV18 exclusive, 3.5% higher there as well. Data Patterns and Blue Star also having a good day in today's session. But the day belongs to the PSUs and the sector. The rail PSUs are making a comeback after a prolonged period of lull, if I can say that. RVNL, IRFC, IRCON, RailTel, all of them seeing gains of between 6 to 10%. So it's been a while since they featured in the movers list, and there they are. So if there are railway PSUs, the others are not far behind as well. HUDCO, Cochin Shipyard, after that order, 10.5% higher there. Mazgaon Dock, 6.5%. SAIL and Nalco also among the top gainers. Some stocks that are buzzing on the back of very strong volumes. And GE Shipping there leads the charts. The shipbuilders are also having a good day today. So off the day's high, but still 4.5% higher. Timken India, 6% with strong volumes, as is Godfrey Phillips, 9% higher there. And Adani Total Gas is up 6%, as is the entire Adani group that is doing well for itself in today's session. And lastly, some stocks that are bucking the trend in today's session. Some of the losers, UPL down 5%. Hindustan Zinc, some sharp spikes seen in the last few minutes. There it's turned positive now, was down almost 4% at one point of time. Tube Investments and Piramal Pharma completes the list of losers. Back to you.
Thank you so much, Hormaz. Quite a few names on the list, and more green than red, so that's the good part. But today we'll be focusing on Make Money Organics. The company is in focus on the back of its Q4 earnings. The company saw improvement on a quarterly basis. However, the year-on-year growth continues to be lower. Company's earnings were impacted by sluggish demand and lower product price realizations across the market. We have Ankit Patel, the chairman and managing director of the company, joining us to discuss the quarter gone by. Welcome, Ankit. Thank you so much for joining us here at Midcap Radar. Would you say Q4 marks the bottom in terms of the pricing worries that the entire space has seen in the last year?
Hi, good afternoon. Yes, quarter four has been the lowermost quarter. Overall, as an industry, it has already bottomed out pricing point of view. And we see from the first quarter and second quarter onwards, there will be improvement taking place.
Okay, so you will see an improvement. So what kind of growth are you targeting in FY25, Ankit, say in terms of volume growth, margins as well, because margin has been a big pain point as well?
So FY24 was quite, we went down compared to FY23 quite a bit. So there will be definitely growth taking place in FY25. We see significant growth taking place because FY25 already bottomed out. And major growth will be there from the volume point of view, pricing point of view, there will be some pressure. But compared to FY24, there will be better margin in FY25.
Okay, can you give us or can you quantify, what will be the revenue trajectory for FY25 and what is the kind of improvement that you're seeing in margins, especially EBITDA margins for FY25?
So overall, as a chemical sector and particularly in the agrochemical sector, we see that the improvement will start taking place somewhere from the second quarter onwards. And in the second half of the financial year, there will be better positivity will be there. So it is a little early to mention about the kind of the revenue target for this financial year, but definitely it will be much better compared to FY24.
Okay, all right. Ankit, there has been a global update as well. UBAC, that is the pigment company in Germany that filed for insolvency. Is it seeing any impact on pigment prices globally? Was it a customer for you or was it only for that particular region that we saw insolvency and the other units are not impacted?
So it has been particularly UBAC Germany, which has filed for the bankruptcy. And so definitely there will be some positive movement taking place for the Indian pigment manufacturers, and we being one of the leading manufacturer of the phthalocyanine-based pigment, it will definitely help us.
Could you give us a sense of what was the kind of market share that UBAC had as far as the Indian market was concerned? What was the market share you were enjoying in your pigment segment? And what is it that you'd be able to gain? Because we understand that even players like Sudarshan Chemicals stand to gain from this particular bankruptcy filing.
Yes, so as a make money, our market share is close to 8% globally, and UBAC definitely they have about 15% market share globally, and definitely Indian market point of view, as you mentioned, in the phthalocyanine-based pigment, we are one of the largest, which is pigment green and pigment blue. So we'll have an advantage in this two pigment.
Okay, you said 18%, right?
As a make money, we have got about 8% market share in phthalocyanine.
8%. Okay, 8% market share. All right. So tell us, you do have some capex which is lined up. You have the nano urea segment where you are putting up a capex of 150 crore rupees. How has the customer demand or inquiry been here? Ankit wanted to understand what will the asset turn here be and when do you commission this one?
For the nano urea plant, we have commissioned in the fourth quarter, which is we commissioned the plant in the month of March. And our plant capacity is 5 crore bottles a year. So if we multiply it in terms of revenue, it can generate revenue of close to 1,000 crore. So it will have a much higher asset to turnover ratio. And as far as the product is concerned, it is a completely new product, which is going to replace partly urea, and which will help Indian government as a government because there is a huge subsidy amount government is paying on the fertilizer and mainly on the urea. So with the new nano urea technology, Indian government will save substantial subsidy amount. At the same time, from the farmer point of view, it is a very good product. It has got better results compared to urea, and as a country, we will all be benefited as a government and as a farmer.
Ankit, one question. So capacity utilization, if you are right, for Q4, in the crop production business was at 77%. In the pigments business, it was around 48%. Now, in the backdrop of, the bankruptcy filing, do you expect to see higher capacity utilization, especially in the big pigment space? So what is it that you're targeting in both of these segments for FY25?
So in FY25, for the agrochemical segment, we see the capacity utilization will be in the range of about 75 to 80%. In the case of pigment, there will be improvement in capacity utilization, but we feel it will reach to close to 60% capacity utilization.
Okay, all right. So that will be the capacity utilization in FY25. I wanted to understand your export-domestic mix, Ankit. We have seen a lot of headwinds in exports because of the Red Sea issues. We have seen freight rates going higher. Is that something which is impacting most of the exporters, because you do have a big export mix as well?
Yes, as a Make Money Organics Limited, more than 70% revenue comes from the export segment, and that is the reason we are now doing the project, which is titanium dioxide as well as nano urea, which we are focusing more from the domestic market point of view to balance our revenue mix between domestic and export market. Regarding the Red Sea issue, yes, for the Red Sea, because of the Red Sea issue, there has been increase in the logistic cost. Initially, we felt it is going to be for a few days, but now this phenomenon is going on since more than 1 quarter, and I think it will remain for next 2 quarters.
Okay, all right. Last question before we let you go, Ankit. You have indicated in your presentation that you'll be seeing decent revenue growth after these expansions and EBITDA margins of 14 to 15% in coming years. When do you reach that mark? Will it happen in FY25 itself, or it'll take some years before you reach that mark?
So again, it is a little early to mention about the EBITDA margin point of view, but on a long run, definitely we see we will be able to achieve that kind of EBITDA margin. Regarding FY25, I think we'll be able to give you more idea somewhere in the second half of the financial year.
Okay, thank you so much for joining us and giving us a sense of how Q4 panned out and how do you expect to see FY25. There's been some disruption in the industry globally and you stand to benefit as well. Thank you so much for your time. But let's now slip into a short break. When we return, we will be joined by the management of Sharda Cropchem to discuss the Q4 numbers and the overall business outlook. Stay tuned.
Welcome back. You're still tuned into Midcap Radar. Sharda Cropchem, that's the next stock on our radar. The company witnessed improvement sequentially. However, the YY performance still sees a lot of pressure. Overall volumes in Q4 have jumped by 25% on a YY basis, but working capital days have increased as well. But the stock was higher, liking the sequential recovery after the company reported numbers yesterday, and it's higher by 3% today as well. To discuss this and more, we have R.V. Bubna, the CMD of Sharda Cropchem, joining us now. Mr. Bubna, good afternoon. Thank you so much for joining us, sir. You've seen an improvement in volumes on a YY basis, and it's a substantial increase. Even on a yearly basis, there is an increase in volumes by 4%. Is this fair to say that the worst is behind for the company and you will see a similar volume growth in FY25 as well, or even better?
Madam, the worst is behind and we look forward to something better.
Can you say better, sir?
Better than last year, of course, but we are looking for a good situation for the company.
Mr. Bubna, when you say better, you are trying to get you to quantify it in some form. Would volumes be better? Do you expect to see some betterment in terms of realization? Do you believe the worst of the pricing as well as the demand scenario is behind us?
So demand scenario is good and the prices are stable.
Okay, Mr. Bubna, we cannot hear you, sir. I think there is some technical issue, so we'll try to connect with you. For now, let me recap Sharda Cropchem's numbers for you. For Q4 of FY24, the company has seen revenues decline by 11.5%. EBITDA has declined by 20%. This is on YOY basis. EBITDA margins have come in at 19.5% and profits have come in at 143 crore rupees, which is a decline of 28%. But the street likes the quarter-on-quarter recovery. But we'll try connecting with Mr. Bubna again. Sir, can you hear us?
Mr. Bubna, can you hear us?
Yes, please. I can hear you.
Yes, please go ahead.
So we asked you about volume as well as pricing. You said pricing was stable, but please continue, sir.
See, I would say that the prices which were going down, that has come to an end. The worst is over and the prices will also start looking up, particularly on the demand side. China, the cost prices increase will be slower, but the demand prices are going to be better and that's going to put the company in a very good situation.
Okay, so you are talking about demand being better. Is there any number that you would like to give in terms of revenue growth guidance and margins for FY25, Mr. Bubna?
Madam, I can give you some indication about the volume. Revenue growth will totally depend upon how the prices behave.
Yeah.
But revenue growth will be much better than what we have seen in the year ending March 24. And of course, volume will also be at least 5 to 10% more than what we have seen in March 24.
So you're expecting to see 5 to 10% at least volume growth in FY25 over FY24. So that is music
Yes,
to the
please.
streets here. So give us a sense of the non-agrochemicals business. On a year-on-year basis, revenue has seen quite a bit of a decline. What has led to this, and FY25, can we arrest this decline and can we see some growth?
Sir, this non-agrochemical business is totally also depending upon the freight, sea freights. The sea freights have gone up abnormally high, and that has brought down the demand of those conveyor belts and non-agrochemical products. But the margins have been very comfortable, and we hope to maintain that.
Okay, all right. So this is largely led by the issues that you've seen in the export markets. You know, we were looking at the internals, and Europe decline has been lesser than anticipated. NAFTA has seen a growth. Can you explain what's exactly happening in these geographies? Have we seen Europe see a recovery from here on? Because that was one of the weakest markets that we were looking at earlier.
Madam, particularly US market and NAFTA region, the prices had crashed so much, which was beyond anybody's imagination. Now that crashing has stopped, and this was mainly also because of excess availability of the products in China. Now the Chinese stocks are getting under control, and the prices in US is also started looking up. So is the case about the prices in Europe. So I see a very good situation for the company in the next 3 quarters.
So you're expecting pricing to move higher. You're also saying that Chinese oversupply now seems to be abating. Sir, give us a sense of the working capital situation. FY24, we saw it increasing substantially. Will that particular number improve as you mentioned the demand scenario improves in FY25?
Yes, sir. Our working capital cycle has gone up from about 95 to 100 days to almost 150 days. I see a considerable improvement on this front in the next 2 quarters.
Okay, so that will improve with the improvement in realizations, or at least volumes that you're talking about. You're still importing raw materials from China. Are they coming at a lower rate as well? Because we were talking about the dumping coming in from China. Is that impacting raw material prices in any way, Mr. Bubna?
Not anymore now.
Okay, so those prices are stable as well.
Yes, madam.
Okay, all right. Thank you so much, Mr. Bubna, for joining us today and giving us all those details. So that's the word coming in from Sharda Cropchem. The street seems to like what the management has said. The stock is higher by 3% in trade as we speak. We'll slip into a short break. When we come back, we'll talk about more stocks and market action. Stay tuned.
Welcome back to Midcap Radar. The Midcap and the Smallcap index are doing very well in today's trading session. And in fact, if you look at some of the FMCG names, remember FMCG names at the start of the trading session today were quite subdued. But in the last hour, even they've pulled up their stocks. So if you look at, if you pull up the chart of Dabur has seen a significant buying, from the last hour and a half. And even Marico has seen further follow-on buying, especially in the last couple of hours. But we are now putting the focus on KFC and Pizza Hut operator Devani International. They just reported their 4th quarter numbers a while ago. Mangalam is joining us with all the details.
Well, for Pizza Hut and KFC operator Devani International, if you just took a look at their reported numbers, they might not tell you the entire picture. So let's break all the numbers down for you. And as a result of which, the stock also was rather volatile immediately as the numbers were reported. The revenues grew about 38% at 1,047 crores. The EBITDA grew by about 15% at around 172 crores. On the bottom line, the company reported a loss of 7.5 crores, and this compares with a profit of 60.7 crores. Let's talk about the top line first. The acquisition of KFC Thailand was something that aided the top line. A 38% growth is what the company reported out there. Remember, the company had acquired KFC Thailand Ops in December 2023. It's a joint venture that they did with Temasek as well. Why is it that the EBITDA margins and net profit lower? One, exceptional expense on account of the devaluation in the Nigerian currency has taken off around 42 crores. Secondly, the employee expenses have increased, one because of the consolidation. The second part is because the company had ESOPs of close to around 1.87 lakh shares which got exercised. And the third part, because of this expansion and acquisition, depreciation, which is a non-cash expense, has increased from 78 crore to about 125 crores as well. That's about the reported numbers. Now the internals, some of them tell you that there is still a lot of weakness in the QSR space in India. Why do I say that? Because KFC India, which was growing for the company, has actually seen a same-store sales decline of 7%. Pizza Hut has actually seen a decline of around 14% on a same-store sales basis. Costa India and Vango are the only two properties which are doing well for them, and that's something that the company has been adding stores to as well. Costa India, for instance, in the fourth quarter, they've added around 25 stores. Vango as well, which serves South Indian food, is up around 9 stores in the fourth quarter. KFC, they added 6 stores, and Pizza Hut India about 2 stores itself. So suffice to say, the numbers actually were muddled by this acquisition, so any growth out there going forward would be important to watch out for. But most importantly, recovery in the Indian urban consumption would be extremely crucial, more so in the pizza and KFC verticals for the company.
Thank you so much, Mangalam, for going through the details of this particular result set. It's been a very volatile stock, but the stock has now come back near the flat line. A couple of other stocks, on the radar, while the metal pack is doing very, very well, have a look at some of the pharma names, especially the names yesterday that did quite well. So if you look at Lupin, if you look at Aurobindo Pharma, if you look at Granules India, some of these names today are seeing quite a bit of selling pressure, and they are the ones that are actually bringing in a little bit of selling pressure as far as the overall market is concerned. But that's all the time we have on this edition of Midcap Radar Mutual Fund Corner. When we return.